Hey, it's Bill Gross, the LA Probate expert, and this is my weekly real estate market update. Is the real estate market falling apart? Absolutely not. And we'll get into the details and explain to you why. Every week I review material to prepare for a weekly update. One of the things I do is I run a search in YouTube of the terms real estate crash. And I counted the number this week was 78 million responses to that query in Google. But it's not crashing. It's just nonsense. Let's take a look at the data. One of the, it was fascinating this week. The San Francisco Chronicle is the largest newspaper in California, I think by circulation. And gleefully they wrote, it's official, Bay Area homes values are finally going down. Now, a couple of things I would note about that. Number one, it's official. Who makes it official? What makes it official? Let's get into that. Second, are finally, because they've been waiting for this headline for a couple years now, going down, not went down once, not went down last month, going down as if they're saying that they're predicting the future. So this headline has all kinds of problems, and let's get into that. So one of the things that's fascinating is when you read the article, it doesn't quite say the same thing than the headlines. It says that the slowing demand has yet to translate to notable declines. This is comical. Notable declines in housing prices. What do you mean? You just said the headline, it's official, and they're going down, and now you're saying that it has yet to translate into notable declines. I mean, I have to keep moving through this or else you guys will stop watching the episode, but I just want to laugh. This is comical. This is bad comedy. And then I said there was a slight month-over-month decrease in typical home values from May to June. So we're talking about 1 month. For 5 out of 50 of the largest metro areas. So this source, in this case Zillow, sampled 50 metro areas. Another 55 went down slightly. Well, did 5 go up slightly? Did 10 go up slightly? Did 5 go up a lot and 10 went up slightly? We don't know. The headline's written to get your attention and scare you, and the market's finally going down, but that's not what the data is supporting. So then you might ask, if you're curious like me, well, how much did it go down? So you go through this, and you notice this graph that you see values going up. That little blip at the end, you can barely see it, the little blip at the end. Now, you'll notice that there's little blips on this way up, on this way up, a little blip on this way up, on this way up, on this way up, on this way up, on this way up. So little blips on the way happen on the way up. Somehow, the San Francisco Chronicle is trying to tell you that this blip is finally, to use their words, sign that it's going to go down again. I don't know. I don't see that. Then let's dig a little deeper because it gets worse. Let's dig a little deeper in the article. How much did it go down? How much is that little blip? And wait for it. Whoa, where is it here? I know it's in here somewhere. It's 0.1%, 1/10 of 1%, not a 1% decline in value. So on $1 million house, a 1% decline in value is $10,000. A 0.1 is $1,000. There it is, 0.1% in home values in San Francisco. 0.1, not even 1%. So housing prices in San Francisco, if the average price of a house was $1.5 million, went down not 1%, 15,000, right? Million, 150, 15,000. Yeah, no, $1,500. That's not a lot. Is that notable? That's official prices are going down. But also remember, this is only in 50 metro areas. It wasn't the whole country. It wasn't non-metro areas for starters. It wasn't suburban areas for number 2. And number 3, it was only 50. How many were those representative of the whole country? It was only 1 month. Rates went up so much in May, and then they've turned around a little bit in June. Are they continuing? Well, again, the San Francisco Chronicle is saying that it's continuing to go up, but I don't know necessarily that the information shows that. So, again, gleefully proclaiming it's official. I'm not buying it. So what's really happening in the real estate market? Well, I think real estate has always been a local factor. One reason why San Francisco and Los Angeles both have problems in California is because of problems the cities are having unique to those cities. So, for example, Starbucks is closing 6 LA area stores it calls unsafe to continue to operate. And in addition to LA, the article notes they're also closing stores in Portland, Seattle, and the San Francisco metro area and Philadelphia, Washington. So certain metro areas have bad crime problems. Maybe that's why those metro areas are doing worse, and other areas have less problems, like Miami or Florida or Texas, where populations are increasing, and maybe those places are doing better. We don't know, but that's where it is right now. So again, I think what we have is some places doing better, some places doing worse. That's a normal market. Maybe more doing better than worse. We don't know. The article clearly doesn't tell us, and the market's not going to tell this. What's also going on in the market? Well, in order for there to be a real estate crash, there has to be lower inventory. I'll look at the inventory numbers, but here's a great study that came out recently from the Up for Growth that surveyed 47 states and determined that California has a severe housing deficit. We have 978,000 less houses than we need as a state. And then went through other states as well, and it talked about how many less homes there are than people, and that's what's going to keep the value of prices up in the long run. That makes sense. That if we're not building houses more than the population, and the population is increasing, how can the housing prices crash when there's still more people coming here to look to buy houses? One of the things, another article I thought was hysterical, that was written by CNBC, again, some of the same actors in the political world. Home buyers are canceling deals at the highest rate since the start of the pandemic. Now, your eyes catch the first part. They're canceling deals. Oh, no. At the highest rate. Oh, no. Since the start of the pandemic, well, that's only in the last 2 years. Maybe it was harder to cancel during the pandemic, and it's gotten easier now or more normal now. That's one thing to notice. Then the other thing to notice is, well, how many are canceling? 15%. Well, it means 85% are not canceling. Is 15% good or bad? Well, it turns out that the record was 11%. So it went from 11 to 15, or another way to translate that, of 100 escrows, now only 85 closed, but in May, 89 closed. Well, this is not really a big deal. So again, home buyers are canceling? No. Home buyers canceled in 1 month more than any other month during COVID. That's really the right answer. But the headline's written to get you to panic that somehow everybody's canceling deals. And this headline reverberated. It was done by, like a lot of these articles are, by Redfin, and it gets kind of echoed through the business world. And buyers hear that, and they want to hold sellers captive. And what happens is, well, let me show you what happens. What we're not doing is getting more inventory. What we're getting is less transactions, because buyers are being told to be scared not to buy, but sellers can afford the house. There's less houses, so they're not selling. Take a look, for example, inventory. Slightly higher. I mean, you can barely see the daylight between last year's record low inventory. Yes, you can say it's over last year, but look where it was compared to the last 3 years. 3 years ago, we had 800,000 houses, over 864 back in 2019. In 2020, we had 650,000 homes. Now the difference between this year and last year is 424 versus last year we had about 424 and change, almost the exact same. So you can see the inventory, while slightly higher than last year, COVID, is dramatically lower than pre-COVID years. So we don't have much inventory. However, take a look at solds. Solds are less. It's hard to find this year's number, right? Kind of in the middle of the pack and dropping down. And so why is that? Well, what's happening, you can see, and then you can see the same thing in Los Angeles. This is our national statistics. Now let's take a look at our local multiple listing service. Homes for sale is up more than last year, than the year before. So almost at pandemic, post-pandemic highs, but way less than the prior years. And again, we have more people, and we've not built much more housing. So if we're still less than the prior years, we still have, these were good years. These were hot market years. Not as good as COVID for sure, but these were hot years. And then take a look at you can see, let me stop in closed sales. Closed sales are less than the pandemic, but still in the range of the prior years, though a little bit less. So what's happening is buyers are scared, prices went up, they're being told there's a housing crash, and sellers are saying, well, if there's a crash, I'll just stay here. So there's less sales. And we're down about 30% over the year, 30% from last year. And we are a little lower than prior years. Hard to say what that means in the long run. Pending sales also down. Again, close to pre-pandemic levels, but below. And here's the key one, sold per square foot going down. You had people probably paying more like everything else, and that pressure is easing. But look, it's still higher than any year in history before. I'm not sure what that 1 month is. There's an aberration there. But you can see still close to record highs in the dollars per square foot being sold. So what does all this mean? Well, what it means is that buyers are being scared every day by the press. The reality is there are not a lot of houses for sale. And if you want to buy a house, you got to pay the price that's being offered or not buy. And if you're a seller, many sellers now are either still listing the price and cutting it, listing high, cutting it down if they want to sell it, or pulling it off the market. So great time to buy if it's a good time for you to buy. And if you're a seller, great time to sell, but you have to price the property in order to make it sell. But at the end of the day, the news for the real estate market is terrible. So if I can help you decipher any of that, call me, text me, email me, and as always, make today your best day ever. Thanks so much.